Hi, welcome to mywealth.com. I'm Bob O'Brien, a senior instructor with the courses. Today's blog is the alternative minimum tax made easy. There's been a lot of talk over the last couple of years, maybe 10 years or so, about the alternative minimum tax. And it was legislation that was actually passed 40 years ago that was intended for the super wealthy that weren't paying any taxes at that time. It's a perfect example of how legislation that was passed 40 years ago can affect the future in an unintended way. What I do want to talk about is a couple of points to make certain that you're not blindsided with the alternative minimum tax, because most people really aren't, but there are some occasions when it can happen, and I want to point them out here now today. Stock options. If you have stock options, you want to make certain that you're doing some planning, especially if you're exercising those stock options. Incentive stock options, as opposed to non-qualified stock options, are subject to the alternative minimum tax. So this is where the confusion can come in. You may get hit with the alternative minimum tax upon exercising incentive stock options, and then there are also some other things in terms of a credit that you may qualify for and a dual basis. You want to make certain that you're either working with a good program or a tax advisor when exercising stock options. Another big thing where people have gotten blindsided with heavy alternative minimum tax is large long-term capital gains. Although long-term capital gains are not subject to the alternative minimum tax per se, it's a perfect example of how the tax system has a lot of moving parts. And by having a large long-term capital gain, what may happen is you may push things around and then therefore be subject to the alternative minimum tax. And you can read more about that in the written blog that's on www.mywealth.com. There are other things that subject you to the alternative minimum tax, such as property taxes, state income taxes, especially people that are on the coast. Sometimes they get hit with the alternative minimum tax because of these things. Miscellaneous itemized deductions is another popular one that gets added back. Usually these don't have the effect as the prior two that I mentioned, where you really get blindsided with a heavy tax bill. You also want to make certain that you're not being fooled by all the noise. When I was writing this article, I was looking at a couple of other articles that were written about the alternative minimum tax, and they really tried to seem to scare people about the alternative minimum tax and make it seem like it was some awful, horrible place where the IRS just steals your money out of nowhere. It's really not the case. As long as you're aware of some of the big items like I mentioned here today, stock options, large long-term capital gain, your taxes are going to be pretty much the same from year to year. But what you do want to make certain you're doing is if you have a life-changing event like selling a business, selling a home, retiring, anything like that, that you are running some numbers to make certain that you're not going to get blindsided with a heavy tax bill. This is where people usually get into trouble. I hope you enjoyed the blog today. Make sure you check out our courses. They're very affordable, $25 at www.mywealth.com. My name is Bob O'Brien, and I'll see you tomorrow with that blog. Have a great day.